I'd like to introduce one of your presenters for today, Andy Morris. Andy, you now have the floor.
Thank you for joining today's EMV webinar, where myself, Andy Morris, Financial Crime Lead Solution Consultant for the EMEA region, and John Verkia, Senior Fraud Prevention Manager, Nationwide Building Society, will share with you our experiences and challenges in respect of migrating to EMV. Our objectives today include describing what EMV actually is, articulating the business drivers behind EMV adoption in the UK, where the industry perceived the fraudster would strike next following the rollout of EMV, checkpoint the success points of EMV adoption, what actually happened in reality in respect of UK fraud trends, the lessons as an industry we learnt, Nationwide Building Society's customer experience in relation to EMV, a Q&A session. So let me start with EMV. So in simple terms, it's all about the chip and replacing signature with a PIN. The customer is required just to enter a 4-digit PIN number rather than signing for the transaction. As illustrated here in the Wikipedia example, EMV stands for Europay, Mastercard and Visa, and is a standard that enables the token, the card and the PIN, the customer's signature, to be authenticated at a POS or ATM device. So what were the business drivers behind EMV adoption? The main business drivers behind the move to EMV was fraud reduction. Since 1996, card fraud losses have increased steadily from a low of 96 million. There was concern that this had to be stopped. The Levy report, published in 1996, also cited the need to adopt stronger defences in respect of plastic fraud threats. However, EMV's focus was narrow and restricted to mitigating domestic fraud losses from counterfeit and lost and stolen cards. As an industry, we failed to think laterally about how the fraudster could change their modus operandi. The industry generally perceived that delivering EMV would force the fraudster to move and exploit other weaker payment channels, as I will mention on my subsequent slides. Reality proved to be somewhat different. There was also concern that other payment sites were also becoming more vulnerable to fraud, and the threats had to be managed in order of priority. Card being the industry's #1 priority. Check and emerging payment types such as telephone and internet banking were also being highlighted as new potential targets. Evidence of ID theft and social engineering threats were also starting to emerge, but did not have the buzzwords of phishing and mishing as they do today. There was also item processing cost drivers behind EMV, potentially driving more traffic offline rather than online. Tokens and cards, there was also the expectation that tokens could be issued with a longer life expectancy. Tighter control in the form of chip, card and PIN were also recognised as an enabler to help reduce the volume of disputes and chargebacks. Particularly with card and PIN present, there was theoretically reduced risk, greater probability that the genuine cardholder was making the payment. EMV also offered opportunities for the issuers to offer new value-added services, differentiate themselves and look for new fee income opportunities. As a card now had the potential to be used in a contactless environment, as a loyalty card or multi-application card, where the cardholder could use the card to pay for public transport or gain access to facilities such as sports centres, parks or public buildings. EID offered opportunities to store biometric type data relevant to the cardholder on the card to help with verification and authentication of the customer. Transit also offered scope for reducing the need to issue tickets or carry cash and improve the customer experience with fewer queues at checkout. These are just a few of the other attractions and motivations behind the drive to EMV in the UK. We will share in these benefits at forthcoming webinars, but today's focus is fraud and fraud prevention. So what were the main business justifications for EMV? The main business justification for EMV was built around the impact of extrapolated losses, estimated at 843 million if the industry chose to do nothing. Doing nothing was not an option. Like most industries, there is also the need to plan and look ahead. As an industry, it was perceived that EMV adoption would see fraud migrate away from plastic to other traditional and emerging forms of payment. Cheque was seen as particularly vulnerable and offered rich pickings, particularly as the step between counterfeiting cards to cheques was not seen as significant. Internet was an emerging technology, and phishing and farming attempts weren't as anything as prolific or sophisticated as we see today. But what I'm taking great pains to illustrate here is that as an industry, we did not see the train wreck that was about to happen, nor how the fraudster would fight back and how aggressive that fight might be. Clearly, EMV was also a market event for the fraudster. Okay, so let me just pause here for a moment and open the lines up because I've got some polling questions that I want to ask you. So on your screen now, you should see a question which I'd like to pose to the audience. Many institutions view fighting fraud as a competitive differentiator. Does your institution perceive the ability to fight fraud as a competitive edge over other financial institutions? If participants today could actually vote on one of those three preferences, I'd like to see what the reaction is. So if you could submit your questions now, responses now. Okay, the poll has ended, and I look forward to sharing those results in a few moments with one of my colleagues. Okay, it looks as though I might have a few technical difficulties getting those poll results out to you. I'll try and come back to them later in the... I've got the results now. So, many institutions view fighting fraud. Okay, is it a competitive advantage? We've got 47% of our today's audience agree to a certain degree, 29% say yes, and a further 24% are not really sure. So thank you for those contributions today. It's good to know. From my perspective, for working in this industry, there's institutions that will view fraud as a competitive advantage. There are others that will want to try and collaborate at an industry level. But thank you very much for providing those responses today. So, back to EMV. So the launch date for EMV was the 14th of February 2006, Valentine's Day. The industry did a very good job around customer education, as illustrated here. I've also included the URL link, as the website is still available but not maintained. However, it does carry some useful information to help educate and raise customer awareness in respect of the planned changes as a result of EMV rollout. Okay, so let's talk about the facts. As I mentioned at the beginning of my presentation, since 1996, card fraud losses have grown year on year. The war on fraud was not being won. These statistics are not good advertisements for the merits of consortium models or me-too strategies for tackling card fraud threats. EMV was seen as the white knight to tackling the problem. Reality today is we have a 365 million problem. Okay, in actual fact, the latest industry statistics out today for 2011 report a further fall down to 341 million. But as a country, fraud is being tracked at 38.4 billion across all sectors. Okay, so let me put this back into context by reminding you that EMV actually set out to achieve, and that was to reduce domestic lost and stolen card fraud and counterfeit fraud. So let's take a comparative look at the fraudsters' modus operandi between 1996 and 2010. We can see from the two charts for 1996 and 2010 the impact EMV has had on lost and stolen and mail interception. Counterfeit has largely remained static. However, the big jump has been cardholder not present transactions. Exploring this a little bit more closely, what actually hurt us, as shown in the statistics between 2006 and 2008, is the rise in card-not-present fraud and the emergence of fraud abroad. As an industry, we failed to think laterally about where the fraudster would hit us next. My personal opinion is we had our eye off the ball. We were complacent. We did not recognise the threat from card-not-present or fraud abroad. We incorrectly assumed our plastic fraud problems would be solved. Just to labour this point, we missed the bus. We were now playing catch-up in respect of card fraud and how customers' cards were being compromised. The fraudster's modus operandi changed. We now saw skimming devices, cameras and transmitters on our ATMs or hidden in cash bins located short distances from the ATM, as in the case of transmitter devices. We had to educate customers, staff, law enforcement to be vigilant to these trends. We also faced skimming attacks at POS terminals. Favourites were gas stations, where skimming devices were attached to the POS terminal and pinhole cameras placed in the ceiling of the shop or store. These incidents impacted both small and large communities. Fraudsters were linked to organised crime or worse. Investigations linked activity to terrorist financing and the funding of Tamil Tigers in Sri Lanka. Again, as an industry, we had to educate customers, merchants and law enforcement to be vigilant to these trends. I don't want to forget the merchant here. The fallout of EMV also brought challenges for the merchant, particularly online merchants, where the cardholder was challenged to enter their 3D secure password as part of the authentication of the payment. Many online merchants complained about cardholders abandoning their shopping cart at checkout when presented with a 3D secure pop-up. Okay, so let me spend a little bit more time explaining what happened following EMV launch. As I mentioned previously, there was a huge spike in card-not-present transactions. Let's just take a closer look at the 2007 fraud trends and the remedies following EMV rollout. Card-not-present fraud was a major headache, and as an industry, we were scrambling around for remedies, which saw the emergence of Address Verification Service, CAP, Card Authentication Programs, and 3D Secure. Counterfeit. Compromised cards at POS and ATM fueled an increase in counterfeit cards, and they were now being used at non-EMV terminals abroad. Again, remedies had to be put in place that included anti-skimming devices, jitter technology, and changes to transaction monitoring solutions. Pre-notification to card issuers that the genuine cardholders were travelling abroad also became the norm. Lost and stolen fell as EMV was set out to achieve. Mail interception. Mail interception was also down. Mass mailing of cards and pins presented risks around EMV launch. Intercepted cards and pins was a potential challenge. Cards were mailed out in disguised envelopes. Pins were mailed out separately. Customers on receipt of the cards and pins had to activate the card by calling their issuer. Mail would only be sent out to low-risk postcodes, zip codes. Separate arrangements were also made to customers in high-risk postcodes or zip codes, i.e. courier or in-branch collections. This helped reduce threats, although, as seen from the latest industry statistics, fraudsters have again returned to low-tech methods as cards now expire and are being replaced. Identity theft. Cases of identity theft were also on the increase as predicted following the adoption of EMV. Cases of collusion, first-party fraud, family and friendly fraud also started to emerge. So turning back to card-not-present fraud. Year on year, card-not-present fraud has grown, but we failed to recognise the symptoms with the launch of EMV. The problem just got worse. More importantly, we're now able to track by channel which channels were more vulnerable to card-not-present fraud attacks. We could also take a risk-based approach to where the threats were more likely to be coming from. It is also worthwhile mentioning that a step change occurred in which countries the fraudsters selected to commit their crimes. The important point here is that with this population shift, system transaction monitoring rules needed to change and countermeasures needed to be introduced to predict these particular trends. As the slide shows here, changes had to be made to system rules designed to disrupt, deter and prevent fraud. Different strategies had to be adopted depending on the channel and the method used to initiate the payment. Okay, so I've talked about card not present and POS, but let me also spend some time on ATM skimming attempts. As illustrated here, fraudsters were prevalent across the majority of the UK. We saw attempts in large urban areas and small communities. However, the fraudsters did show persistence for using the main road and rail networks within the UK, the M1, M4, M5 and M6. Okay, so let me open the polls once again with an additional question. When do most of your ATM skimming attempts actually occur at your ATMs? So again, if participants could respond with their responses, I'll be very grateful. So again, just to repeat the question, when do most of your ATM skimming attempts actually occur at your ATMs? And if you could submit those questions, that would be really good. Okay, I'm just waiting for the poll to close and the results to be published, and I'll share those with you very shortly before moving on to the next slide. Okay, that's interesting. Okay, so what we've got is none at 5 a.m. in the morning. We've got 5% of the audience think it's 1 p.m. 5% also think it's 7 p.m. 32% think it's actually midnight, and 53% don't know. The 5% that picked the 1 p.m. Time, well done, gold star. Let me just show you some statistics here. These are statistics from Link, which is a scheme in the UK that provides ATM transaction monitoring. And as shown here, we can see that the evaluation that Link carried out, they identified that between the lunch hours were more prevalent to skimming attacks. So again, that might be interesting for your region going forward with EMV, but that's from analysis carried out by the Link network in the UK. And again, just to re-emphasise, the majority of the attacks were around the lunchtime period. Okay. As an industry, steps were also being taken to gather and build up criminal intelligence. APAX launched FIS, the Financial Intelligence Shared System, for the benefit of the wider community. When fraud attempts occurred, institutions were obligated to report those attempts and losses. The dedicated Check and Plastic Fraud Unit was also formed, sponsored and funded by the government and banking sector. Their mandate was again to disrupt, deter and prevent card and non-plastic fraud. This was a joint partnership with law enforcement, government and the banking sector. The dedicated Check and Plastic Fraud Unit have gone on to deliver significant benefits to the industry. Other countermeasures include Link introducing a liability shift, where if it could be proven that a scheme member's card had been compromised at an ATM not fitted with an anti-skimming technology, then the issuer was protected for the first 250 of the loss. The challenge for the industry was proving liability. Link, in partnership with law enforcement, also offered incentives for reducing and gathering intelligence on ATM crime. The industry was now trying to fight back. As I've already mentioned, as an industry, we had to act quickly to emerging threats. Anti-skimming devices were attached to the ATM. The challenge here was convincing the genuine card holders that the skimming device had not been attached to the ATM. ATM jitter technology again made it more difficult for the card to be skimmed, but again the customer experience was that they were having their card skimmed. Address verification did work, but the fraudster applied workarounds, such as waiting outside the address for the delivery of the goods, or would use addresses where the occupants were away. 3D secure customer experience was poor. Customers were encouraged not to respond to pop-ups as part of internet banking initiatives. 3D Secure wrote these rules. Security checks around resetting of 3D Secure passwords could also be easily farmed through social engineering techniques, such as date of birth. CAP, card authentication programs, provided out-of-band and single-time passwords to help authenticate the cardholder. Again, the customer complained about the experience. Mail disguise and card activation again provided remedies to mass mailing of cards and pins around EMV launch. Okay, so what else is on the horizon? ID theft continues to be a problem. It isn't going away, as the latest industry figures from CFAS show. The war on crime continues to be fought on several different fronts. We cannot afford to be complacent. We are in an arms race where we have to be flexible, and technology is the enabler. So let me take this opportunity to turn the webinar over to John. However, before I do so, I thought it important to first share with you the ACI solutions that Nationwide Building Society are using today to help drive down their active card fraud losses from a high of £16 to a low of under £4, one of the very lowest in the industry. Over to you, John, to share your own experiences on EMV adoption.
Thank you, Andy, and morning and afternoon to everyone. Yeah, just to give, for people that don't know, an overview of Nationwide Building Society and who we are. So we are a major provider of financial services and have been for 160 years. We have mutual as opposed to PLC status, which means we're owned and run by and for the benefit of our members, so we don't have any shareholders to answer to. With assets in excess of £200 billion, we're the UK's third largest savings provider and mortgage lender, over 50 million customers in 900 UK locations, and in 1997 we were the first to introduce a retail internet banking service in the UK. In 2009 we were named as one of the world's top 50 safest financial institutions by Global Finance magazine. This slide is actually a little bit old. We were also named in 2011 as well, and where it says we're ranked third in the UK for customer satisfaction, we're currently ranked number 1 within our peer group, so we're doing okay at the moment. So what I want to cover is kind of the main areas of EMV and fraud that we've encountered over the last few years. Specifically, I'm going to talk about fallback, the cross-border fraud, our weaker tokens, the tiered blocking strategy that we've used with PRM, the different EMV functionalities and the future-proofing that goes with that, a brief mention of two-factor authentication, 3D Secure, and then just a summary. So fallback, for people who are not familiar, basically this is where you're using a chip card at a chip-capable terminal, but the chip itself is not being read either because there's a failure with the terminal, there's problems with the chip itself, and the transaction will fall back to the magnetic stripe. So you're actually bypassing the EMV capability that's there. When we rolled out all our chip cards, there was a real reluctance, certainly within our business area, to decline chip transactions that didn't use the chip, that dropped back to fallback, because it was felt that there was a poor customer experience off the back of that. We kind of pushed quite hard to look at declining these transactions on the grounds that if we don't really get the advantage of EMV. So we kind of did that, and we worked out that we'd have around 1,000 fallbacks a day in the UK, which you would decline, and the concern was that we'd get 1,000 complaints a day, and after the first week we'd had 2 complaints. So we felt pretty vindicated on that it was the way to go. A lot of the other UK banks didn't take this approach, and they were still approving transactions that were being effectively performed with counterfeit cards, so they kind of missed out on that advantage and continued to see significant fraud losses. Currently at the moment we average around 2,000 fallback transactions worldwide, which is pretty low. We don't see any complaints off the back of that, so we're quite happy that we're going to decline those. This is purely, obviously, from an ATM point of view. From our point of sale, we have a slightly different tack. We can't realistically do a blanket decline with those transactions purely on the grounds. If you're in a supermarket and you've just got 15 bags of shopping and your card's not going to work, it's a pretty poor experience. So we don't have a blanket decline, but we do have a fairly aggressive decline strategy using PRM, so we can kind of weed out what we believe to be the suspicious transactions. And it's fair to say, since we went EMV, that the customer understanding and how chips work and that you don't put them through the washing machine and stuff like that, people kind of generally get that now, and there's a general feeling that, you know, people understand that chips do fail, and sometimes just a little clean of the chip and try it again can make it work. So that's a good thing that's happened off the back of that. Cross-border fraud, obviously, as counterfeit card usage was severely impacted in the UK, what we saw was an immediate migration of the counterfeit card fraud to the overseas region. Initially, it was within Visa EU, so Italy, Romania, places like that, with a very low EMV rollout themselves, had a lot of non-chip ATM terminals out there. So we saw a lot of our compromised cards in the UK and counterfeit card spend appearing in those countries. And as they increased their EMV saturation, more and more transactions started to appear in the Asia-Pacific region. So we saw a lot of fraud in India, Pakistan, Indonesia, countries like that, and additionally also Canada and obviously the US, Australia. So we continue to see sort of fraud in those areas on a sort of steady trickle basis. So consequently, we kind of put some very aggressive rule strategies against counterfeit card or magstripe transactions at POS and ATM. Very effective, and we set limits based on which countries are high risk and which countries are lower risk, and we can kind of limit usage in those countries. Additionally, another type of fraud that we're seeing is a chip and signature. So at the moment, we can't differentiate between a chip and PIN and a chip and signature transaction. There's a lot of chip and signature terminals, POS terminals out in the Asia-Pacific region. So unfortunately, they look just the same as chip and PIN transactions. So if someone steals your card out there, they can go straight in a shop and make a purchase with it, and we see it as a fully authenticated chip transaction. They didn't even need to know your PIN. So that's a little bit of a problem for us, but we've got a solution, and we're looking to implement that in the near future. The other thing that kind of happened with us is that we had a few of our products, our ATM cards and our savings cards, which remained magstripe, and these were heavily targeted during ATM skimming attacks, to the point where if we had 20 cards skimmed at an ATM, if 10 of those were chip cards, the fraudsters would pretty much throw them away, and the 10 that were left, they would use those and make counterfeit copies and just spend as quickly as they could on those. So on our domestic ATM losses actually increased slightly on those cards. We eventually upgraded those cards to chip cards, and we also, with that, prevented use overseas, so they're UK-only chip transactions, and as we're fully chip terminals, we get no fraud on those at all now. So that was pretty useful, and it's something we probably should have done a lot sooner rather than wait until we lost some money on it. But that's kind of the way the business works these days. We obviously rolled out a lot of anti-skimming technology, but it's okay for us to do our bit. But to be honest, if other issuers or other independent ATM deployers are not putting skimming technology in place, it still causes a problem. If you get outside a supermarket, you get 5 ATMs in a row, a fraudster will come along and he'll take 4 out of service and he'll put skimmer on the 5th, and so everybody goes and uses the 5th ATM. And if that one's not got any anti-skimming technology on it, then obviously you're going to incur a lot of fraud. The link liability shift that Andy mentioned earlier, yes, it did have some marginal benefit. There's kind of an unwritten rule at the moment that if one bank doesn't sort of tell on another bank, then everybody keeps quiet, and then nobody gets any penalisation against them. So we haven't actually had any claims against any banks for I think almost a year now. So it's kind of been limited in terms of what it's offered, and I think primarily because the amount of fraud is depleted so much, certainly on the ATM side, kind of ground to a halt a little bit. But I'm not fully convinced it was kind of worth the effort in terms of what it gave us. But if you think the maximum liability for a big bank would be £100,000 in a year, well, it'll cost you 10 times that to protect all your ATMs. So why not just forego the 100,000 and just ignore it? And I think that's kind of what a few banks did. So possibly not as hopeful of having an effect as they wanted on that one. With our PRM, we have a tiered blocking strategy. So we can decline certain transactions while still approving others. For example, obviously the vast majority of fraud that we see is card not present. So once we see that a customer's card has been compromised by card not present fraud, we can decline those while still letting the customer use their card for chip and PIN activity. So many times the customer's oblivious that their card's been compromised until we replace it, and they can keep using it, and that's very effective. It allows us to implement a very aggressive blocking strategy, so we can go quite aggressive on that while not really affecting a genuine customer's usage, particularly in a chip and PIN environment. And that gives us very good FPs, and obviously from a customer's point of view, it's very useful. And as a consequence of that, we have one of the lowest domestic and cross-border decline rates. I think we're about half the UK benchmark on that. So our current chip rollout is DDA cards. We did a forced reissue in 2009. This wasn't driven by any immediate fraud threat. The SDA cards that were originally rolled out, which most banks started with, hadn't really been compromised. There had been a minor attack in France in 2006, but that was very isolated. And we just felt as a future-proofing thing, because we were looking at other functionality for CAP and RTDV, that we needed to do the rollout anyway. Pretty much most issuers now have got DDA cards out there, and this was a mandate from Visa from 2011 and onwards, so any cards issued since 2011 will be DDA. The ICVV functionality that came with DDA cards has prevented PED attacks, which were PIN entry device attacks, which we get in retail outlets, which were a major problem for us, primarily driven by Tamil Tigers. Tamil Tigers, to keep ticking over, cost about $500 million a year. So they were very aggressive fraud attacks on retail outlets, particularly petrol stations that we saw in the UK. The way it would work is that there would be a skimming attack on the PED that would read the MagStrike image off the chip. ICVV actually prevents that, because the CVV that's present on the MSI is actually different to the CVV you get on the magnetic stripe. So when you make a counterfeit card from a PED attack and put it on the mag stripe, it doesn't actually work because the CVV is actually incorrect. So that pretty much eradicated that fraud from 2009. Briefly to mention CDA, we haven't got any CDA. I know there is some CDA rolled out. I think some Saudi Arabian banks have got it. Very limited use at the present, purely because a lot of the terminals, certainly in Visa EU, are not capable of processing CDA-based EMV transactions. So we haven't seen that extensively used yet, but that's no doubt going to increase in the future. Just to touch on two-factor auth and 3D secure. The CAP two-factor auth, Andy mentioned that, gives you a strong one-time password, but there is a risk of phishing, and the customer experience is very poor. So we kind of only use that for online banking. We did look at it for internet purchases and stuff, but it's just too tedious for customers, so that's something we've not pursued. The 3D secure side, obviously, DBV for Visa, secure code for Mastercard. It is very limited security. Certainly, the version that we have at the moment isn't great. Our secure and non-secure transactions are not massively different in the fact that neither of them are particularly secure, and it is certainly not a viable two-factor authentication scheme. So as Andy mentioned, it's certainly in its current guise, it's not absolutely great, and obviously there's much better stuff out there that we could be doing, but it needs to be coupled with a good customer experience. To summarise, EMV does work, despite what you might read in some versions of the press and what Cambridge University tend to come out with, but the workarounds that we do see, and there's another one just come out today, generally are just pretty much proven in lab conditions. It's not something we've seen in a real-time environment, with possibly one exception in France last year, but very, very slight. And obviously, there's been other developments in the Union platform, so CodeSure, which is where your card has a built-in PIN entry and stuff like that, and gives you cap functionality on a card. And VPay, which are chip-only cards with no magstripe, which are fairly extensively used around Europe at the moment. The downside of EMV is that the genuine token becomes the target now, because the counterfeit versions of a card are so less affected in a good return on investment. What we see now is access to the genuine token becomes key, and obviously if you have got the genuine token and you have got the PIN, it's much harder to detect that that's fraud. So it doesn't happen as often, but when it does, you tend to lose a little bit more money, and of course you don't have any chargeback capability off the back of that. So that's a net loss that's written off. And also, of course, that the EMV infrastructure will no doubt benefit the mobile banking platform going future, because that's kind of put that in place for future development. Some key takeaways that me and Andy talked about. Being proactive is key, and it's very difficult, I appreciate, in business to kind of push things forward if you've not lost any money. But we see examples time and time again where there's things that we want to do, but you can't get justification because you've incurred no loss. But if possible, these things really need to be pushed on, because fraudsters won't give up. They will target the weakest link every time, and if there is a gap in your defences, they will exploit it. It's just a matter of time. And keyed in with that, of course, is that being future-proof wherever you can. So think ahead, think big picture. What can I do now as part of any sort of product development that's going to look ahead of any kind of new fraud trends that are going to appear? And it also spoken about educating the law enforcement. Certainly from a UK point of view, this has proved difficult. Recently, a lot of police forces have said that they're not going to look at financial crime, and if they do, the UK financial industry is going to have to pay for that themselves, which is not really the way we want it to go. So I tend to think we're a little bit on our own at the moment on this, but time will tell if there's any future funding. I think in the next 4 years, certainly in the UK, that they're looking at putting additional investment forward. So we may be on our own for a few years yet, but we'll have to see how that goes. So hope that was useful. Thank you.
Thank you, John, for sharing your own experience of EMV rollout and the fraud challenge you encountered. I've got one final request in terms of our audience today, and it's another poll, unfortunately. So if you could take the opportunity just to respond to the final poll question, which should be on your desktops very shortly. And basically, I'd ask you to respond to say whether you found today's webinar informative, did it meet your needs? So if you could give us that feedback, I'd be very grateful. I'm also conscious of time because we are running up to the hour, but we have got time to take some questions, and I can see that some have come in via chat. John, I know you've already touched upon the educating law enforcement, and I'll give my perspective on this as well. One of the questions is, now that you have experience and have task forces within law enforcement, where do you think the most probable problem with, where do you have the most problem with fraud today? Obviously, we've got law enforcement out there today. It's a bit of a mixed bag in terms of where they're actively targeted to address financial crime along with other crimes. But John, where do you see the main problem with fraud today, both from a plastic and non-plastic perspective?
From a plastic perspective, as always, for us, it's card not present. It accounts for half of our gross losses, and it's constantly a major issue. I mean, data hacks are going on around the world every single day, lots of them. Many of them we don't even hear about, and it's certainly in its current guise, card not present is our biggest risk. And also other aspects that we can't control. For example, Visa have just launched VMe by V, which is their kind of PayPal equivalent offering, using an e-wallet, and consequently any fraud that occurs using your VMe by V e-wallet, the liability sits with the issuer in that, because obviously from Visa's standpoint, the merchant has no visibility of the card details, so they don't have a liability. So that's obviously a risk for us. And in Australia, they're currently trialling the Visa Easy Payment System, VEX. And again, the liability sits with the issuer on that. They're only low-value transactions, but we still have no comeback on a fraudulent activity. And of course, transactions like that don't require a signature or a PIN. So obviously, we're at risk of loss on those. From a non-card perspective, the problems we have, which are primarily UK 6012 fraud, which is your balance transfer and stuff like that, your identity fraud, and that kind of thing. I mean, generally, I mean, we also see things on mortgage fraud and stuff like that, but really, it's the identity fraud and stuff like that. But when you lose on those, you tend to lose significantly. So on the card, it's the CMP, and on the non-card, it's kind of account takeovers and identity frauds and stuff like that.
Yeah, and I think I've alluded to some of those within the presentation. I mean, from an industry perspective, account takeovers up 18%, so that is a threat across all channels, all entry points, and all exit points of the current account or DDA account. So that would be one of my highlights. I mean, John also touched upon mortgage fraud there. I know as an industry, we are trying to form another task force and involve law enforcement to aggressively go after mortgage threats. So I know we're making steps towards that. Again, that is likely to be, as John has already alluded to, involving funding from the banking sector. So, John, thanks for sharing those. I've got another question that's come in relation to FIS. So the database that APAC set up, how exactly does FIS help the banks in the UK with fraud? I mean, just to reset and level set here, FIS is a shared database, so it's about building intelligence. So as a fraud attempt is made, that intelligence needs to be captured, logged and recorded. It is sent into the FIS database. The intention is to build other cases where the same modus operandi has been used and to pass those on to the dedicated check and plastic fraud unit. They will then carry out those investigations. So it's like, okay, £100 loss here, £1,000 loss over here. Where there's correlation of evidence that it's the same perpetrator or same organised crime gang, then the motivation is for the dedicated check and plastic fraud unit to become involved. John, I don't know whether you want to share your own experiences of FIS from a institution perspective.
Yeah, I don't want to rain on your parade here, Andy, on that one. I'd question its benefit really from an issue point of view, purely because there's kind of a pressure put on institutions that they have to kind of upload various sort of, whether it's to do with common points of purchase or mail not received fraud or beneficiary fraud or whatever it is, and there's kind of an onus that we do that, and the stuff that's uploaded by the various institutions almost as a tick box exercise to say, okay, this month we uploaded this and this and this, but the data itself is not actually regulated, controlled, and to be fair, you can almost upload anything you want, and currently I don't think it's consistent enough to be that useful from certainly for those areas that are involved in fraud, because you're kind of already one step ahead of that anyway. So personally, I haven't seen that much benefit, but I think it's got potential. I just think it needs to be a little bit more regulated and a bit better controlled.
Thank you, John. One final question, and I'm going to close today's session. I did, and it relates to the incentives around Link. So the business case for Link and the liability shift was to try and get those institutions that own the ATMs to actually install anti-skimming technology. So the basis behind the 250 liability shift was to build the business case that if they didn't invest in ATM anti-skimming technology, then they were likely to be the recipient of a 250 or up to £250 liability claim from the issuer. I think John's already done a very good job in explaining in practice that's probably a gentleman's agreement between the issuer and the ATM network that is probably not pursued. I don't know whether you want to add to that, John.
Yeah, what we tended to see was that any claims that came in, the penalised bank, if you like, were given a 30-day window to fit anti-skimming functionality. So what would happen is, so Bank A would say to Bank B, we had 20 cards skimmed at your ATM. We saw spend in Australia on those 20 cards. We want £250 for each card that was skimmed. Once it's agreed by Link that that's an actual compromise. Then Bank B would say, yeah, that's fine, but if we provided we fit a skimming device in the next 30 days, we don't have to pay up. So that's what everybody did. Whether they fitted an anti-skimming device or not is a different matter, but it was kind of a get-out clause, and if that ATM didn't get skimmed again, then you'd never have any penalty to pay. So I don't think anybody any bank was out of pocket on being penalised by more than a few £1,000s. So it never really reached its maximum liability for each issuer. And there was always concerns that proving that it was a compromise, and then the other bank would say, actually, I don't think it was, and stuff like that. So in reality, it was good in principle, but in reality, it didn't actually. I'm not convinced it added the benefit that it did. And when you look now, a lot of ATM sites in the UK have been taken over by supermarkets and stuff. They have no onus to fit any anti-skimming. They don't issue the cards necessarily. And if cards get skimmed at their ATMs, from their point of view, it makes no difference because they have no liability in either case. So, other than possibly a reputational element. So in that sense, it didn't really work. And to be fair, it's probably less likely to work as time goes on, as a lot of ATM sites become unprofitable. So they're taken over by larger organisations that have less of a concern from a skimming standpoint. So I think that one particularly, that liability scheme, is pretty much dead in the water for now.
Thank you, John. Right, I'm not going to take any more questions now. Those of you that have submitted questions, we have your questions. We will get back to you individually with responses to those questions. I would like to take the opportunity to say thank you for joining today's webinar. We hope that what we've shared with you today has been informative and thought-provoking. Please also remember that ACI is a global payments and financial crime solution provider. If you're looking to minimise your EMV threats and you want to know how ACI can actually help your own organisation mitigate those threats, then please do not hesitate to contact one of your local ACI representatives. Thank you very much, ladies and gentlemen.